This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE Roll-Off Trailers and Lugger Trucks, July 9th, 2018. Last week, prices and most economic reports were mixed. U.S. steel production rose slightly and is now ahead of July for the past 2 years and at a multi-week high as U.S. tariffs continue to limit steel imports. Oil fell a mere 35 cents per barrel to $73.80 as sanctions on Iran begin, and it's reducing their oil sales. There are oil production problems in other countries as well, which is also limiting supply, therefore causing higher prices. U.S. oil production remained at 10.9 million barrels per day, the highest level in history. Lack of infrastructure, such as pipelines, is slowing further increases. Iron ore fell 50 cents a ton to $66.50 on a good balance of supply and demand, despite spreading trade disruption. Scrap steel, number one heavy melt, was up $2 a gross ton to $3.35 on little news. Prices were mostly stable for July, with some pockets of up and some down, while prime grades were slightly up. Hot-dip galvanized steel remained stable at $11.90 a ton on good demand and tariffs, which have brought higher U.S. prices. Copper fell a big 18 cents to $2.82 a pound, down a huge 46 cents in a month on tariff nervousness and global trade disruption, including China cutting back buying U.S. scrap copper. It's up 3 cents this morning to $3.85. The 5-year chart shows copper prices are back to where they were about a year ago on all the instability. Copper inventories have been falling on global instability that we have been mentioning. Aluminum fell 2 cents to 93.9 cents as markets are finding their way in this global trade unrest. Aluminum LME inventories fell again and are approaching new 8-year lows on all the good demand. Trade conflict with China has escalated as the U.S. added tariffs on $34 billion of goods coming in from China, and China retaliated immediately with $34 billion of goods they buy from the U.S. If all goes well, both sides will find a way to de-escalate this issue very soon. The U.S. added a strong 213,000 jobs in June to reach yet another new high of 126.45 million workers. There were nice gains in professional and business services, as well as manufacturing, healthcare, and construction. A very good report. The labor force participation rate, which is all U.S. people 16 years old or older that could work, improved to 62.9% from 62.7%. This means that a huge 37.1% of possible workers are not in the workforce. Higher wages could get many people back to work. June's U.S. vehicle sales rose to an annual rate of 17.47 million, while below trend, sales continue their almost 10 years of improving. Note, this is sales, not manufacturing. Companies like Mercedes and BMW are exporting hundreds of thousands of U.S.-made vehicles to places around the world, while they and Japan also import more than 1 million vehicles to the U.S. The U.S. balance of trade has been negative for decades and has become a huge issue with the president. May's trade deficit, while still hugely negative at $46.1 billion, it's the smallest trade gap since October 2016. Exports of soybeans and aircraft soared as the U.S. exported the most goods and services in our history. But the politically sensitive countries like China saw an 18.7% surge in trade deficits with the U.S., and the Mexicans have reported a deficit of 18.8%, with Canada rising a huge 86.2%. Wall Street's Dow Jones Industrial Average rose a nice 186 points to 24,457 as markets like the strong jobs report. While the China tariffs are bad, they had been expected, so they were built into the market. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.